Hi everyone, this is Dr. Chhoda with Ignition Time, and welcome to my channel. Slightly different setup today, slightly different data since it's a Sunday. Just changing things up a little bit. How is my community? How is everyone doing? My name is Dr. Chhoda. Welcome to this episode of Ignition Time. I want to welcome you to our channel. Thank you so much for being a viewer. Thank you so much for being a subscriber. I'm actually going to do something a little bit different today because I want to be able to help as many members of our community as possible make money heading into this new world. This channel is about the country, the economy, and about your money. And if you folks like this, I can do this on a regular basis if you folks like this. So it really depends on the kind of feedback I get to the channel. Excuse me, to this particular video. A lot really depends. If you folks want it, I'll do more of it. Because this channel, the Ignition Time channel, is not just about the news, not just about stimulus, not just about unemployment, but this channel is also about trying to help you make more money financially and help you get to the next level. Now, before I share the strategies, my strategies for the coming week, I want you to know that I'm a long-term investor. Any stocks I buy, I plan on holding on to for at least 10 years. Okay, that's number one. Number two, I'm a little different from other investors where I specifically talk about how many shares I have, and I'm not going to do that. I'm not going to talk about how many shares I have and the value of my portfolio. I'm simply going to tell you what moves I'm making. And folks, it shouldn't matter how many shares I have. It shouldn't matter what I'm buying. Excuse me. It shouldn't matter whether I'm buying, 5,000 shares of Apple or 6 shares of Apple. What should matter is what I'm doing, and then you need to decide whether you want to emulate it or not. Okay, so I'm not going to show you screenshots from my portfolio because I have different accounts in different places, and to get screenshots of those and then to blur out the account numbers and then to show that to you, that's just too time consuming. I'm not going to do that. I'm just going to give you the meat and potatoes of what I'm doing, and then you can decide whether you want to emulate it. That's number two. Number three, um, I want all of you to be financially successful and financially free. So whatever advice I'm giving you, you need to make decisions yourself. In other words, what I'm doing may not be right for you. So that's just a bit of a disclaimer right there. My broad strategy. Let me tell you three of my biggest positions. My biggest position is in Apple. I own a lot of Apple. And my second biggest position is in Bank of America. And my third biggest position is in a stock called Virgin Galactic, which is a space tourism company. In my opinion, Virgin Galactic, which is a $30, what is it, 33, 34? In my opinion, Virgin Galactic is a stock that can be $1,000 in about 10 years. Now, this is my opinion. This is my opinion. Could the stock go to zero in 6 months? Yeah, it could. It could. But again, based on what I've seen, this is a stock that I'm personally very bullish about for a number of factors. But let me just jump right in and tell you about my investing moves and my investing strategies. And I want to welcome you all to our channel. Thank you so much, everybody. My name is Dr. Chhoda. Welcome to my channel, and let's just jump right into my specific my portfolio. So let me show you. Let me tell you what my plan is for next week. Now, keep in mind that many companies, many companies are releasing earnings next week. I own a significant amount of Apple stock, so my strategy is going to be covered calls on Apple and covered calls on Virgin Galactic. And when I sell covered calls, I make sure that I'm getting at least a 10% return on my money. And I'll actually show you folks a couple of examples of how covered calls will actually work. So I'm actually going to give you specific examples of how that works. So let's just jump right in, everybody. This is my strategy, my stock market strategy for the coming week. Now, again, actually, folks, before I go any further, let me emphasize that for me as an investor, I own many single-family homes. So, and for me, the rental income from my homes is sort of my foundational portfolio. Everything I do in the stock market is a combination of foundational. Let me keep it simple. I own lots of real estate, but what I do in the stock market is designed to gradually compound money. And my goal in terms of compounding money, my goal in the stock market is anywhere from 30% a year to 50% a year. Now, in case you're like, that's not possible. Well, through a combination of options trading and through a combination of dividends and stock market appreciation in your stocks, it is possible. And when you compound, when you compound money, money grows very quickly. In fact, I'll tell you what. Let me actually pull up a compound interest calculator for our viewers and subscribers, because I'm a big proponent, everyone, of compound interest. So let me see if I can show you folks. Yeah, this should be nice. Let me show you folks a compound interest calculator, just to give you a sense of how money can compound over time. So I'm actually going to show it to you super fast. Just one moment. There you go. So yeah, this is just some random calculator. You can find compound interest calculators online. So let me give you an example of how compounding works. So if I take $10,000, and let's say I don't add anything, but if I'm able to compound it for over 10 years at 40, let's just say 45%, and you compound it 12 times annually, which means it will compound every month, you should end up with close to $1 million. So converting $10,000 over 10 years to $1 million. Now, obviously, the question is, how do you get 45%? Let me give you all a simple example. And now what I'll do is I'll pull up a calculator. This is me coaching you guys. So hopefully this is now, for those of you who think this is not possible, I get it. I mean, it sounds like it's impossible, right? Let me see if I can show you my calculator and give you an idea on how something like that may be possible. So let's get okay, there we go. Perfect. There's a calculator up on your screen. And now what I'm going to do is, let's take the stock of Apple for a second. Apple is, I believe, $133 right now. Now, if you had to earn a 48% return on Apple, you would need Apple to be at $196.84 at the end of 2021. Yeah. So Apple's not 133. It's actually up to 140. It started to go up leading up to the earnings reports. Oh, by the way, that's another big tip for you all. This is a big tip for you all. I never buy and sell a stock as it's getting close to the earnings report, and Apple's earnings are coming out next week, and so are Virgin Galactic. Virgin Galactic's not making any money right now. It's kind of like Amazon losing money, not making money for a long time. Even Netflix, a stock that loses money for a long time, then turns positive, and then it shoots up. The same thing happened with Tesla. So let's get back to Apple for a second. So Apple's at 140 right now. For you to make a 45% return on Apple, Apple would need to be at $203 by the end of the year. Now, even if Apple doesn't reach $203, the question you need to ask yourself is, can you get an additional $50, $60 for every $140 invested through a combination of appreciation, dividends, and options trading? So that is, obviously, I can't teach you that in 5 minutes because it's taken me years to learn that. But so for me personally, I own a lot of Apple, and I got into Apple early. So my cost basis on Apple is a little lower. It's not a lot lower, actually, because I've been buying Apple consistently. My cost basis on Apple is $129. And so for me to earn a 45% return on Apple, I need Apple to be at $187 by the end of the year. Now, this is where things kind of get interesting. Even if Apple doesn't reach $187 by the end of the year, I know that I'll be getting a dividend. From Apple, which is a few bucks. But I also know that I can earn money by selling covered calls on Apple. So for me, if I can make, let's just say $15 with covered calls, and I'll show you how I do that. If I can earn $15 through covered calls with the Apple stock that I already own over the course of the next 12 months, and assuming that my covered calls, expire out of the money. Now I'm getting a little technical with options trading. Folks, as far as the basics of options trading are concerned, if you need information about the basics of options trading, I'll include some references and some links for you. But I'm not going to go over the basics of options. I'm probably not going to go over the basics of options trading in this particular video. But if I can earn around, let's just say $10, $15 through options trading, I only need Apple to hit 172 by the end of the year. Okay. So for me to get my 45% target, my target is 45% a year through all the stocks around. Now the question is, how do I make $10, $15 through covered calls on Apple? So I'll actually cover that. I'll actually I will actually go through that in just a second. But let me go back, everyone. Let me go back to my strategy, which is sort of showing you pretty much everything that I'm doing. So here's my whole strategy, folks, nothing held back. So this is, I'm about to reveal my investment strategy, everyone. Ready? Here we go. Let us jump right in. Let me make sure I have the right window open. Keynote, perfect. Okay, so let's do this. So first of all, folks, disclaimer. Let me make sure that I move myself up a little bit. Benefit of doing these things in real time. I'm not a financial advisor. Okay, I'm not advising you to buy or sell anything, and there are no guarantees of any success. In fact, you might lose money, you might lose all your money. So I just want to throw that out there. There are no guarantees of any financial success. All information I'm providing you is educational and conceptual. Buying and selling is up to you. I'm showing you the moves I'm making, and you need to consult with professionals before you make any decision. If you lose money as a result of any advice I give you, then it's your decision. I have positions that are both profitable and unprofitable, so I do need to get that disclaimer out of the way, because these are the things I'm doing. This doesn't mean you should be doing this. Okay, so let's get into what I'm doing. Apple. I own a significant amount of Apple. I'm going to wait till the Apple's earnings report is out. I believe Apple, in fact, you know what? Why don't we take a look at where Apple's at right now? Let's take a look at where Apple's at together. I will go to my watch list. Actually, give me a moment, everyone. So, what I'll do is I'm going to go to my watch list, and I will show you guys where Apple is at right now. I believe it's 140 or something. So we'll show you guys where it's at. I'll sort of switch back to Safari, which is the browser that I use. So yeah, I do have my own watch list here. So let me come back there and show you folks what I'm actually doing. Switch to Safari. Okay, here we go. Now this is important. Apple's at 139, but extended hours trading, it's up to 140. I own a lot of Apple, and I started buying Apple a long time ago. Okay, so now here's the thing. If we look at the chart over 6 months, you'll see that the stock has started to surge. And if you look at the chart over the past 5 years, it's been consistently up and down. As the market's been going up and down. But here's the interesting thing about Apple. Let's see. Let me go to the 6-month chart. It's at its all-time highs. It's getting close to its all-time highs. I believe the all-time high was about 150. Let me see the 52-week high. Let's see the 50. Okay, it's 100. Okay, so it is at its all-time highs right now. So here's the thing. For me, since the earnings, now, by the way, when the earnings of Apple, I believe, are on the 25th, they're coming up on Tuesday or Wednesday. I never buy, I never ever, I just want to be clear, folks. I never ever buy or sell a stock close to its earnings date. I never do that. I just sit tight. If the earnings are good and the stock shoots up, I continue selling covered calls. If the earnings are bad and the stock goes down, I buy more. That's what I do. Okay. So let's get back to the screen here. So let's say Apple's earnings, by the way, here on the 27th. Today's the 24th. So Apple's earnings, we're going to get Apple's earnings in 3 days, right? So plus, by the way, the Federal Reserve is probably going to keep interest rates the same. They're going to, continue to try and boost the markets. I do believe that the stock market's going to continue to go up for the foreseeable future. And then we'll see a major correction, maybe 10, 15%, some sort of a major dip sometime this year in the next 3 to 6 months. And, it's nice to have some money by the side when that happens. But for me, if I catch the dip, that's fine. If I don't catch the dip, I'm okay with that, because my investment horizon is 10 years. But Apple's at 140, results are coming. My expectation is that when Apple's earnings come in, they will exceed expectations, because I know a lot of people that bought iPhones. I think I bought like 7 iPhone 12 Pro Max. Don't ask me why. I gifted one to my father-in-law, one to my mother-in-law, one for my wife, one for me. I used one iPhone Pro Max for recording, and then I think I bought 2 others. I don't even know what I did with them. I think I gave them to employees or something. So I know a lot of people spent a lot of money on Apple products. The machine I'm using is a MacBook Pro. and pretty much. I mean, right next to me, right here. Here, let me show you. Right next to me is the trackpad, the Apple trackpad. So I use a lot of Apple products. I'm very bullish on Apple. So for me, I expect the results to be really good, and then my expectations that Apple should probably post earnings settle somewhere around 145, 150. And the reason I say that is at that time, once that happens, I'm actually going to go and I'm going to start selling some covered calls on Apple. By the way, hopefully this is helpful. If this is getting too technical, then let me know. But let me go back to my presentation there. Okay, here. So I believe that Apple will end up at right around 150 post earnings. I believe that Apple will be at 150, uh, if not by the end of next week, in the next 2 to 4 weeks. And then I'll start generating cash by selling calls. Now, what's a call option? Let me show you folks something super interesting. And I'm actually going to go to this application. Okay, now this is what's called as an options chain. So let me go to the Apple options change, everyone. Options chain, excuse me. So today is the 24th of January. Now, on the 19th of February, okay, I can get paid $1. I can get paid $1 right now. If you folks see my screen here, I can get paid $1 right now to sell Apple at or below $165 on the 19th of February. This is called an options chain. In other words, when I sell this put, I now have an obligation to sell Apple, okay, at 165. Okay, this is important. Okay, if I sell this put at $1, then I have the obligation to sell my Apple shares at 165 on or before the 19th of February, which is 26 days from today. Now, here's the interesting thing. Let's get a calculator out, everyone. By the way, this is 26 days away. Now, this is where things get super interesting. Let me get back to the calculator. Now, the question is, and folks, try and keep up with me here because I'm about to get a little bit advanced over here, but I'm doing this so it can help you all. Why would I want to sell my Apple stock at 160? Well, first of all, I just want to be as clear as I can. Apple, my cost basis of Apple is 129. Okay, it cost me $129. It cost me $129 to buy the Apple stock because I've been buying it for a long time. Honestly, I should have got it cheaper because Apple went down to 110, but I didn't. I couldn't get in at the bottom. I'm not perfect. Okay, so, but here's the interesting thing. So if my cost price is 129, okay, and if I'm getting a dollar for 26 days for the obligation to sell it for 165. Okay, by the way, if it goes from all the way to 165, I'm making quite a bit of money. Okay, but why would I want $1, okay, to sell it at 165? So first of all, $1 over 26 days. Now, if I take 365 days a year and I divide that by 26, that's 14. That's a multiplier of 14. Now, if I'm getting $1 over 26 days, that means I'm going to get I'm going to get $1 times 20. Hold on, $1 times 14. Yeah, I'm going to get $14 over the course of the year. Yep. So basically, if I'm getting $1, this is important, guys. If I'm getting $1 over 26 days, and if I'm able to duplicate that trade over the course of over 14 times in the year, right? 14 times in the year. So if I get $1 over 26 days, that means I get $14 over 365 days. In other words, if I get $1 again over 26 days, I get $14 over the course of the year. If I can get $14 over the course of the year, let's get back to my calculator. If I can get back if you had a $129 investment and you got back $14 in 1 year, that would mean that your rate of return, I think, is right around 11%. Yep, there you go. See, here's what this means, folks. My stocks, my Apple stock, if I can just get that dollar 14 times during the next year. I'm earning 11% returns on the Apple stock. That's point number one. And by the way, I hope you remember earlier in the video when I mentioned, hey, I want to sell covered calls, and then let's get back to my presentation. Let's get back to the presentation here. If you look, it says here the goal is to generate cash flow without being called away. Now, in case you're wondering, hey Nitin, why do you only want $1? Why don't you actually get more? Because the truth is, let's get back to that application. The truth is, I can actually get paid more if I'm willing to give up my stock sooner. I'm talking covered calls here, everybody, covered calls. By the way, if you don't know anything about options trading, I'm sure you can learn, but I can get paid $3 for the obligation to sell Apple at 149 on or before the 19th of February. Now, here's the interesting thing. Why did I choose $1? Why? Because I don't want to get called away. I want the stock to keep going up. I would be surprised if Apple hits 165 before. By the way, this is a trade I'm probably going to do at the end of the week after the earnings. Okay, I would be surprised if Apple hits 165 by the 19th of February. I hope it doesn't. You want to know why? In fact, I'll be happy if it goes all the way to 164. Why? Because I get to keep the dollar and I get to keep my stock. In other words, my options contract expires out of the money. So that is the game, everyone. That's what I do. So again, let me get back to my presentation. Yeah. So with Apple, I'm going to sell covered calls post earnings because I don't want to get stuck if the stock shoots up too much or falls down too much. After the earning. Honestly, I don't care whether the stock goes up or goes down. I'm going to be holding Apple for 10 years. Okay. But my guess is that the earnings will be excellent and the stock is going to go right up. And then I think it'll probably settle around 150, 155, and then I'll probably end up selling a covered call not at 165 but maybe at 180 or 190 because I do want it to expire out of the money. I don't want my shares to get called away. In case you're thinking, oh, hey Nitin, what happens if your shares actually do get called away? In other words, if the share, by the way, if the share goes to 180, I still have to sell it for 165, right? But then, look, I got it at 129. I'm not complaining if someone takes it off my hands for 165, right? But here's the thing. If Apple goes to 164, I still get to keep the stock and I get to keep my premium. My goal is to generate cash right around 10, 11% a year of the stocks I already own and then enjoy the rest of the appreciation. But never to sell or buy stocks or never to sell or buy options right around the earnings. I'll wait until a few days after the earnings. I believe Apple's earnings are on Wednesday. So folks, that's my strategy as far as Apple's concerned. And let me get to the next thing. I have a similar strategy, everyone, with Virgin Galactic, which is another stock that I own. And I'm going to do something similar with Virgin Galactic. And Virgin Galactic is not making any money right now. It's a space play. So I'm going to do something similar. Now, one of the stocks I'm really looking at, everyone, is Boeing. Boeing is an excellent, excellent, excellent stock that has been hammered quite a bit. It's been hammered quite a bit. So with Boeing, I'm actually going to sell a put because I do want to own Boeing right around $190. So here's a really interesting thing. By the way, I do have a few shares of Boeing, not a whole lot. And I do believe that, folks, once this crisis is over, I believe people will start flying again. So I think Boeing will be fine. But right now, Boeing is, let's actually see where Boeing is right now. So I'm actually going to switch the screen real fast. And let me see, come here. Let me then switch to Boeing. One moment. Yeah, so let's go back to that screen and then let's see where Boeing's at. Boeing is a really good stock, everyone. Really good stock. And it's down quite a bit, which makes it a very, very interesting buy. I love Boeing. Beautiful. This is a fantastic stock, Boeing, $206. Beautiful. I am almost tempted to buy it at 206. But what I'm going to do, I want to pay less for the stock. So what I'm going to do is I'm actually going to sell a put. So let's go to the options screen. And now let's go to Boeing. It'll help if I can spell. So let's go to Boeing. there it is. Okay, let's go to Boeing and let's see. Yeah, 19. I could do 19 February. So let's go to Boeing and I can sell a put for Boeing at $197. Okay, and I can get paid right around $7 to sell that put. What that means is I am selling. So now I have an obligation to buy Boeing at 197.50 on or before the 19th of February. And by the way, that amount, you got to have that money in your account to be able to do that. So I don't mind, because if I get paid $7, I don't care if Boeing goes all the way down. I mean, it could, but I don't think it will. But if I get paid $7 and I get put the stock at 197.50, now I end up owning Boeing at $190. And Boeing is a share that, just so that you know, before the pandemic was right around $440. And then it fell all the way down to, what is it? Yeah, it fell below 100. I would love to own Boeing right around 190. So that's going to be another move I'm going to make, everyone. I'm actually going to be selling puts for Boeing at right around $190. That is going to be 197 is where I'm going to sell the put. So I hope that makes sense. And hopefully this is super valuable, everyone, because my goal is to obviously help you guys get to the next level. And then there's a stock genomic ETF, an exchange traded fund. I'm also going to sell puts here. ARC-G, similar strategy to Boeing. I don't want to pay. I believe it's at 110 right now. I don't want to pay 110, so I'll probably end up selling a put, which means I get paid, but then I have the obligation to buy that stock at that price. I don't want to. I believe the stock, folks. I just want to be as clear as I can. I believe the stock market is super high right now, and it's. I wouldn't really buy a lot of stock until the market corrects if I'm new to the stock market. But since I have huge positions, I'm looking at just holding on to stocks, selling covered calls for cash flow, and then the positions that I want to enter, like Boeing, like ARKG, I'm going to be selling options contracts so I can pick them up a little bit cheaper in case there's a downturn. And by the way, if those stocks don't hit that rate, okay, if they do not hit that price, I just get to keep the premium, and then I can keep selling puts a little bit lower. So hopefully at some point I get put, so I get to enter the stock at the price that I want. So folks, that's it. That is my overall strategy, everyone. Let's quickly walk you through the strategy. Okay, Apple selling covered calls, Virgin Galactic selling covered calls, Boeing, I'm going to sell a put so I can get put the stock right around 190. ARKG, I'm going to sell a put, so I'm going to get put the stock right around 90. I believe it's well over 100 now. ARKG, I'm not going to buy it at that price. And yeah, that's my ignition. That's my strategy. Remember, folks. Disclaimer: I hope you folks found this valuable. What I'm going to do is I'm going to see if any of you have any questions. Let's see. Okay. Let's see. I hope that this wasn't too technical. Okay, so that was a strategy, everyone. I hope it helped. Thank you so much, everyone. I appreciate you all, and I hope that this was valuable. I'll see you in the next episode of Ignition Time. I hope this was valuable. Let me know in the comment section if you want me to do more of these going forward, and I'll be happy to, because I'm here to help you guys. Thanks.